Boom. Oh, yeah, traders. Let's do this. Let's do this. One more time. Here we go. Yes. I am so excited. Welcome, traders. Welcome. Welcome to another live Q&A with Oliver Velez. My name is Oliver Velez, of course, and I am your trader for life. Don't you ever forget that. That's right. I'm your trader for life. Yeah. I see Tennessee in the house. Georgia is in the house. Wow. Where else are we coming from here? Morocco? This is so incredible to me, traders. This is so incredible to me. This is so incredible to me to be able to just almost at will and at whim log on, and you log on, and we are instantly communicating from virtually all four corners of the earth. This is where technology has brought us. It has collapsed time and space. Technology has reduced prices to practically zero for things that used to cost millions upon millions of dollars. This is the magic of technology. It has been driving the evolution of our species from the beginning of time. Yes, technology is not a new phenomenon. Technology is something that has virtually always been in existence, from the use of sticks to the use of fire to the use of bow and arrows to the use of slingshots to the use of certain forms of ammunition to the use of electricity to the use of oil in the combustible engine to the use of telephones and so forth and so on, guys. You know it. We have been in a tremendous evolutionary technological developmental period since the beginning of time, and it continues to improve the quality of our lives and increases the ability for us to communicate and, just as importantly, cooperate. All right, so here, traders, I promised that I would do more regular Q&A sessions with you, and here I am today trying to deliver on that promise. I also promised that I would try to do this virtually every single Monday. That might not be always possible, but that is my slated day. Whenever I can't do Mondays, I will fall back on a Wednesday, and so here we are with a fallback session on Wednesday. But what I'd like for you to do is grab a beverage of your choice. Make sure you have something to write with, something to take notes with, because I hope to be able to share 2 or 3 things of value every time I am afforded the opportunity to present something to you. Every time I'm given the ability to speak into a mic, I do my very best, traders, to deliver something of value, something that I believe has the ability to uplift and improve the way you see and play financial markets. I have always believed throughout my entire career, which spans well over 3 decades, that the markets would be increasingly more democratized, that ultimately the retail, regular market participants would start to wag the dog, the institutional powers that be. We have arrived at that place. I believe it is virtually everyone's responsibility to, in one form or another, be connected with financial markets. Whether you like it or not, money makes the world go round. We are in a state right now where our money is broken. This creates both opportunity and pain. And I find that it has been a travesty throughout life that regular individuals are locked out of knowing truly what money is, what the financial system is. That is on purpose. And I promised a long time ago that I would dedicate a portion of my professional life to spreading the gospel of trading, financial awareness, and raising the sophistication of those individuals who reside on Main Street. I spent a great many years on Wall Street. I got tired of basically helping wealthy individuals become wealthier, and I felt that my time would be better applied to regular people like I was when I started my professional career. I did not come from a well-to-do background. I did not come from a well-connected background. I was not born privileged or with the proverbial silver spoon in my mouth. I worked very hard to open doors for myself, but I did promise myself that if I were to ever make it to a certain state where people wanted to listen to what I had to say, that I would dedicate the majority of that time to helping individuals like you and everyone else on Wall Street who has an interest in raising their level of awareness about financial life. And so what I want to do is I want to take some questions presented by you. I do want you to understand that it is my intent to take the first questions from my Twitter account. So if you are not following me on Twitter, please do so. OL Velez 007. You can virtually find me all over social media with that name. That's my name. OL Velez 007. Make sure that you are aware that there are many scammers out there pretending to be me. So there's no dots in that. There are no dashes. There are no extra zeros. There are no extra L's, no extra O's. It's simply OL Velez 007. All right. Make sure that you're very sure that you're communicating with me. Okay. This is a problem that is ubiquitous right now with anyone who even is remotely popular on social media. So the onus is now on you. You have to be responsible for your own safety in this regard. You have to be extra diligent. All right. And when in doubt, just doubt. All right. When in doubt, just doubt it's the person. And that's what we have to do today. There's nothing we can do about it until these things improve. Okay. All right, guys. So follow me on Twitter. Of course, follow me on Instagram as well. It's there where I spend the majority of my time, at least, communicating on a day-to-day basis. And it is here where I spend several hours every day making sure I deliver something of value to you here. So if you're not subscribed to this channel, please subscribe, turn notifications on. I promise you, if you follow this channel for the next several months and make sure you absorb every single thing that I produce on a day-to-day basis, you will not recognize who you are as a market participant, your awareness of financial markets, how they operate, how you operate, and so forth and so on with financial markets. I promise you that you won't recognize who you've become. Right, that is how this channel is designed. Okay, so without any further ado, I'm going to take the first few questions from my Twitter account, if you'll allow me to do that. And let's see here. Okay, let's see what we have here. Okay, first question is regarding Bitcoin here. Oliver, Bitcoin dominance is up. See the chart. Do you think that Bitcoin is not being priced as a growth stock anymore and is rather being priced more like a store of value a la gold? Bitcoin dominance up and gold up, geopolitical issues looming. All right, so this question is about Bitcoin's dominance in relationship to all other cryptocurrencies in the entire cryptocurrency ecosystem. And what a lot of people do is they monitor how much of Bitcoin's value represents is representative of the entire ecosystem of the cryptocurrency market. And I'm just not quite sure how important that is. First of all, I don't really put Bitcoin in the same category as cryptocurrencies. I know it is a cryptocurrency, but I don't put it in the same category. I look at other cryptocurrencies largely as scams, number one. And those that have some use case, maybe I can be stretched to believe that they're more like a technology stock or a project or a project that's being tested, because none of the other cryptocurrencies have proven that they are viable. And this is something very important to understand. So when you're comparing something like Bitcoin that has the potential to be the base layer of value for the entire world against an unproven project run by people who basically own 70 to 80% of it and is floating the other part to have you pump the price up. When you compare Bitcoin to things like that, you are doing Bitcoin an injustice. And you are also flagging yourself as someone who's relatively ignorant about the space. Now, granted, I'm very new to the space, but I believe over the last 2 years I've gone deep enough down the rabbit hole in this ecosystem to basically understand these huge differences between Bitcoin and other cryptocurrencies. All right, there is no comparison. It's like Bitcoin is not even in the same galaxy, the same universe, the same galaxy as these other things. All right, so when it comes to the Bitcoin dominance, that's sort of like comparing its value versus the value of the other things that really have extraordinarily low value to me, at least. So I don't really look at it very much, and I don't regard the Bitcoin dominance as important. The other thing I will say about that is that that the prices of many of these other cryptocurrencies, the value, the market cap, is a very tricky thing. In most cases, the market cap of these things are false and manipulated, and they're driven by the insiders. All right, so you get a bunch of VCs that basically create a coin, pump a whole bunch of marketing around the coin. They talk about things that they're going to do. No one ever really gets to the point where they're really, really doing it, right? They pay reporters to basically constantly write articles about them, and they hold 70 to 80% of the float, and they manipulate the small amount of coins that are out there to be able to move the market's value. So if I were to create a coin and I gave, and I would, if we all were to create a coin tomorrow and we issued 12 billion coins, all right? And if we could get one person, and we hold 90% of the supply. So 90% of the supply is closely held. 90% of the coins is closely held. Look at how this can be manipulated. We put 10% out there available to buy and sell, okay? If we can get one person to buy one coin for for $1, now our entire project is basically said to be worth $1 billion. One transaction, now it's worth $1 billion. Why? Because there's a billion coins. We're holding 90% of it, right? We float 10% out. We get one person to be able to buy one coin for $1. Now we're at $1 billion valuation. Now, if I can get friends to buy for $2, now we're at a $2 billion. And if I can get another friend to buy at $3, now we're $3 billion. And I can create the impression that this thing is moving. It's doubling from 1 to 2 to 3. And look at how the value is going from 1 billion to 2 billion to 3 billion. Guys, this is an old game, and it's now being applied to the cryptocurrency market. I've been in the equity markets for nearly 40 years, 35 of which are professional. I've been around stock pumpers and dumpers. I've been around penny stock scams, and this reeks of that. Do you understand? It reeks of propping up a false valuation around something that really has no provable use case. All right? And I know a pump and dump scheme when I see it. All right? Now, I know a lot of people out there might be, a lot of people who are loyal to these projects. They're going to hate me for saying this, but there's not a single project that's proven. All right? There's not a single project that's done anything worthwhile. There's only one. There's only one. All right? And if you come at me and tell me that there's some value in, cartoon monkeys being sold for millions of dollars, I'm going to tell you that Let's see how that plays out in 5 years, right? Because 30-year-olds today buying a cartoon monkey, a, a, a JPEG version of a cartoon monkey for 300, 400,000 instead of buying a house, right? That's not going to play out well over 5 years. Mark my words. All right, guys, enough of that. Sorry. I get riled up about these things. I hope you see that. I want you to see that, but I get heated up about these things. All right. Okay. So let's take the next question here. Here's another, guys, there's so much going on in cryptocurrencies. It's not that I'm choosing these. It's just that's what's being asked, and that's what you want me to answer. I'll answer, but I'll answer anything about any market. All right. Just so you know. All right. Oliver, have you ever joined cloud mining, and how is your profit? Cloud mining, guys, look, if you're asking my advice, I want you to remove cloud mining from your vocabulary. Those two words should never fit together. Do you understand? There's clouds. Okay, very viable, centralized clouds, as long as you are okay that the fact that your privacy can be easily violated by storing things on a centralized cloud, but that's fine. It has some value. Mining has huge value. But when you put them together, now we're talking about a scam. Do you understand? Cloud mining, 99.9% of all cloud mining is a scam. Do not believe, I wouldn't even believe one. Do you understand? Not even one. All right. Now, again, you can take that advice from me or not. That's you. That's up to you. But I am telling you, based on my investigations, those two words should never be together. Forget cloud mining. All right. You want to get into mining? All right. Get into direct mining for yourself. You want to invest in some miners? All right. As long as your energy cost to mine Bitcoin is under a certain cost, okay, then fine. Do it that way. Or find some co-location direct mining company to help you do that. All right. There are several out there, and do it the right way. There are no shortcuts, guys. No cloud mining. All right. Okay. Let's see what else. Okay. Here's a question, guys. It's too long for me to read, but the gist of this is this individual, VJ, is saying, Oliver, sometimes, first of all, he says, Oliver, I'm a big fan, and whatever little knowledge I have of trading today is all because of you. All right. So great. I thank you very much for that, VJ. Now, what he's basically asking is, he said, listen, I watch multiple time frames when I'm trading. He says, I trade off of the 2-minute time frame of a stock and the 5-minute. So I'm looking for my opportunities through two windows, the 2-minute and the 5-minute. But sometimes the bigger time frames, like the 15-minute chart, are actually giving me an opposite message that my trading time frames are delivering. So if I get a buy on the 2 or 5-minute and I look at the 15-minute, the 15-minute looks bearish or negative, while the 2-minute or the 5-minute looks positive. So what he's basically asking is, which one how should I deal with that conflict? Should I override, should I not do the trade on the smaller time frame because the bigger time frame is saying no? Or should I ignore the bigger time frame and obey my trading time frame? And the simple answer is not to necessarily ignore what the bigger time frame is saying, but you always give the benefit of the doubt to your trading time frame. This is very important to understand. So if you've chosen the 2-minute time frame as your trigger time frame, this is the time frame on which you identify your trading opportunity and make your entry. All right. If a bigger time frame is in conflict with that, the bigger time frame is not to discourage you from taking your battle time frame signal, but what the bigger time frame can do is be a size adjuster for you. So the bigger time frame might say, okay, because I'm in conflict, don't do this as heavily as you normally would do the play. Cut the play in half. So if you play 2 lots regularly, play 1 lot because I'm in conflict. When I'm not in conflict, it's a regular play. So if your regular plays are 2-lot plays, okay, then play 2 lots when there's no conflict. Play 1 lot when there's conflict, but don't let a bigger time frame make you not do the trade that is being suggested on your battle time frame. All right, this is very important, because if you don't do this, you're going to find yourself in conflict 80% of the time. You're going to be tied in knots and not able to really trade with exact authority and certainty. And this is a very important quality to have. You have to know when you act, you have to act with authority. You have to act without doubt and without hesitation. If you are trading with this hesitation and doubt, it means that you are operating with conflict. And so you have to basically remove conflict from your overall trading approach. You have to find a way to remove conflict. And this, what I'm explaining to you, helps you do that. So if you have 4 things that you buy, under 4 scenarios that you buy, and you're sitting and you're observing the market and waiting for those 4 things on a smaller time frame, your battle time frame, and boom, you get one of those things. You check the bigger time frame. The bigger time frame is just an advisor for what size, not if I take the trade. No, what size? Okay, you're not in conflict. Boom, 2 lots. Oh, you're in conflict. Boom, 1 lot. Okay, it's only an advisor for size. It is not a ruler of the trade. Do that, and I guarantee you'll trade with greater authority, greater certainty, and greater clarity. All right, VJ, that was your question. Good. Okay. This is a question I don't know how to pronounce the name, but I will say this. Oliver, can I ask you something? Taking advantage of you here. What do you trade? I know it's stocks, but can I trade CFDs? Okay. I'm not a big fan of CFDs, guys. I know they might be useful as a training vehicle, but as a way to try to earn your living in the markets, I think it's one of the worst markets you can get into. First of all, most of those firms are set up for trade. Most of those exchanges, most of those organizations are set up for traders to lose. All right. I know many examples where my traders have opened up accounts at these CFD firms, and if you're too accurate, they close your account. They don't want accurate traders. They're not in the business of doing. They're not in the business. They make money from you losing, basically. And so I can't say that 100% of them are like that, but I have never come across one that has not closed accounts when you're too accurate. So stick with real markets, guys. All right. If you're looking for capital, come to a firm like me. I provide the capital for you guys. All right. So that you don't have to worry about trading, showing up to a gunfight with a little tiny knife when you're not going to win. All right. The number one reason most people lose, the number one reason that most businesses fail is for lack of capital. The number one reason that most traders fail is for lack of capital, because trading is no different from a business. Right. And if you're not properly capitalized, you have no chance of winning in this game. It's difficult enough to win if you're properly capitalized. Imagine if on top of that difficulty, you're showing up to a gunfight with a knife. Right. It's just you're giving yourself zero chance. So if capital is your concern, all right, let's talk. All right. I can help you with that. All right. And as long as I have my capital in your hands, trust me, I'm going to pour every single ounce of knowledge that I have, every ounce of wisdom, every lesson, every tactic, every technique is going to be yours. And you're going to get trained and handheld and developed and seasoned and matured every single day of your life. Because if I don't do that, I lose my capital, right? It's not your capital at risk anymore. It's mine. So this relationship keeps us honest, right? It keeps you dedicated and focused, unless you just want to lose this right, okay? It keeps me honest and constantly focused on doing whatever I can to improve you, because if I don't, I'm the one who loses. Do you understand? I lose my capital. You don't. All right. So I will take 100% of the losses. You will never have to pay me back if you lose. All right. And I think that's the way I mean, that's the way it's done on Wall Street. I mean, a trader gets out of school and is hired as a trader on Wall Street and loses. They don't say, give me the money back. They just lost. That's the way it should be. All right. And a lot of firms, when I started doing this all the way back in the mid 2000s, a lot of firms were against this, right? A lot of firms were against this because this whole model put pressure on them. All right. It put pressure on them to do the same thing. And not many firms had the wherewithal to fund traders. Not many firms, even the firms that didn't want to because of the high failure rate. But I took the chance. And so I fund all of my traders today. So CFD market, no, sorry. All right. And what else here? Okay. I think that's pretty much what I have here. So let me talk to you here a little bit. I see all of these questions scrolling by. Wow. Guys, this is incredible. All right, here. Okay. Matthias is asking, Eric is asking, I don't understand this question. He's saying, set custom time. I think maybe he might be responding to someone else here. Oliver, what do you advise? This is an interesting question here. Oliver, what do you advise a university undergraduate for trading? Well, this actually came up last night. I was talking to a bunch of friends that might be interested in getting involved in trading, and they were saying that, Oliver, there's so many different markets. Which market should I start to learn trading from? And I've always believed that the equity market is the best place to start. Now, guys, I don't know if many of you know, but I was a concert pianist as a kid. All right. My whole young and adolescent life was dedicated to playing the piano. My parents, right, invested tremendously in my piano career from the age of 3. I went to special schools. I had teachers that flew in from many different countries because I was part of the special program, the special music program. I ultimately wound up doing concerts around the country at 8 years old. My whole career was supposed to be as a concert pianist. All right. I stopped that at the age of 16 at the chagrin of my parents. And this is one of the major reasons why my parents were so against me trading. Not that necessarily they felt trading was bad. It was simply because everything they had planned for me, everything they invested in me to do, everything that was my number one focus in life, I was throwing away for this activity called trading. And so it made them hate trading. Right? It made them make it hard for me to actually do this. And that added some additional pressure. But I will tell you this, that because I believe, because I understand music, I believe I understand a lot of things about trading. They are connected in many ways. Like reading the bars of a chart is very similar to reading the bars of a musical piece. And when you're in music, when you get to a certain level in your development as a musician, you begin to understand that it's not just the notes. In fact, it's the spaces or the silences between notes that actually have more importance than the notes themselves. Then you start to realize, and your mind gets expanded as a musician when you realize that the notes are there to interrupt the silence, that the silence that's behind the notes, that silence is the magic. It's not the notes. The notes are interrupting the silence. And so what's behind the notes? Now, if you take this to trading, it's the bars, the 2-minute bars that are moving up and down. That has some value. But there is really no space really between one 2-minute bar and another 2-minute bar. And so that space is kind of imaginary, right? That there's one fluid tune that's running through the market. And anyway, these similarities with music and reading sheet music and reading notes and getting into the flow of a musical piece as a pianist is very similar to each stock being a piece of music and reading the notes and being able to feel the flow of money basically running through that musical tune, money running through this piece called Apple or what have you. And the similarities, I believed, helped me. And even from the point of view that you play music from a keyboard and you trade from a keyboard, right? So even keyboard skills and executions, because my traders and I, we don't trade with a mouse. No professional trader trades with a mouse. Most professional traders are hotkey traders. So they program certain buy and sell and bid and offer activities, and each keystroke does a different thing. But anyway, I tell you all of that to say that in music, most musicians will tell you that anyone who knows how to play the piano has an advantage, because you can now take the skill of piano playing into virtually any other instrument and have a big head start with that instrument. All right. And there's really no other musical instrument that really offers that at the level that piano does. If you know how to play the piano, you can easily translate that skill into any other instrument. Well, if you know how to trade the equity markets, I promise you, you'll be able to go to any market and do well, whether that's cryptos, whether that's options, whether that's futures, right? You'll be able to extrapolate. You'll be able to transfer that skill into virtually any other market. It's not always the case in reverse. So equities first. That is my recommendation. All right. Oliver, if someone pays you directly, Narendra's asking, Oliver, if someone pays you directly with BTC, Bitcoin, to a non-KYC wallet, that is a wallet where your identity is not necessarily associated with that wallet, non-KYC wallet, doesn't their identity get associated with my wallet now? All right, well, it's not your, yes, in a way, yes. If they're sending you from their KYC, their exchange wallet, which is a KYC wallet, a wallet that's associated with their personal identity, from that wallet, they send you to a non-KYC wallet. Yes, their identity is associated with that wallet. However, all right, your identity is unknown. Now, they might know your identity. All right, that's very true. Whenever you're trying to receive non-KYC Bitcoin, it's probably best that both transactions are from a non-KYC wallet. So but if the person still, even if the person with a non-KYC wallet is receiving the Bitcoin in from a KYC wallet to a non-KYC wallet, even the non-KYC wallet is now linked to their identity. So it's a little complicated, but if you could create the best solution, is that the person sending you Bitcoin is going to take his coins from his exchange, all right, move it to a non-KYC wallet. From a non-KYC wallet, do something like a coin join, and from the coin join, send that wallet to you, and that breaks the link. Now, I don't want to get into details regarding that now, all right, on this Q&A session, but look up coin joins, all right? Just research coin joins and start getting educated about that, because that's a very important key to privatizing your Bitcoin. And what a lot of people don't understand is that Bitcoin is pseudonymous. It is not anonymous. Do you understand? It's a very big difference. The base layer has to sacrifice privacy to be decentralized. All right. You can't be decentralized and offer 100% privacy. Now, the privacy level becomes bigger on top of the base layer. So the Bitcoin Lightning Network is eons more private than the base layer. And so you have to actually do most of your transactions if you're concerned about privacy, you have to do most of your transactions on the Lightning Network. All right. And I believe that by 2028, almost every single person will be operating on the Bitcoin Lightning Network. So this is just going to become normal course of day-to-day business and transactions between each other. All right. So Lightning Network and coin joins become extraordinarily important. You coin join your coins, you get them into a Lightning Network wallet, preferably through your own node, and all of your transactions through there are practically going to be 100% private. All right. This looked interesting. Just saw another interesting question there. All right. Oliver, what is your preferred method to entering short-term options trades? Also, your opinion on which bid-ask, also your opinion on the wide bid-ask premium spreads. Well, Corey, you touched upon exactly one of the reasons why I do not like using options for short-term oriented trading. You see, options were primarily invented to serve as a hedge. So I'd say that 95% of my use with options is to hedge relatively large positions that I'm holding. All right. And they're not designed for short-term oriented trading. The spreads are too wide, so you get killed on the spreads. All right. The mispricing of options. So it's easy for an option to become undervalued and overvalued by a wide margin. So you could, in addition to a wide spread with options, you could be getting in at a misplaced value in the option. All right. And there are liquidity concerns with some options as well. It's just the poorest vehicle for short term. It's a great vehicle for hedging. It's a great vehicle for picking up extra income. All right. And these are some of the things I'm going to be doing in the near future with some of my Bitcoin traders. So, for instance, once Bitcoin gets far away from certain key moving averages, we can start selling covered calls against the Bitcoin. All right. There's some risk, and every method or every technique has some risks. So you have to understand the risks in a strategy like that. You can use options to pick up an asset that you want, but you're going to gain some extra income while picking up the asset. So as an example, with using BTC, if I want to buy at lower prices anyway, then I can sell a put against Bitcoin, collect the premium of the put. And if I get put the Bitcoin, I wanted the Bitcoin anyway. And so I just got Bitcoin and some extra income. So it's these strategies that options were basically created for, and hedging against an overbought or oversold asset that you might specifically have at the current moment. But when you get into trying to replace trading stocks with options because you think options are cheaper, you're really a poor man playing. You're playing the poor man's racetrack, which really produces a lot more losses. There's a 92% failure rate trading the underlying equity itself. Now, when you go to a derivative of the equity like options, it becomes immensely more complex. So if there's a 92% failure rate trading the item, then what about the derivative of the item? You take the losing rate to 98% because of all the reasons I mentioned: wide spreads, inadequate liquidity at times, mispricing, and the number of games that options market players can play are exponentially larger than the games that the market makers can play in equities today. All right, so all of these things make short-term oriented options playing really, really a bad choice. And let me just say this about this, guys. I want you to understand that throughout history, people that have inadequate amounts of money have been the number one victim, all right, the number one victim of most financial operations. So let me give an example. What I'm trying to explain to you is that what's enticing, what has been used historically to take advantage of the poor and of the inadequately capitalized is a story that you can make big with very little. This story has been responsible for most of financial atrocities amongst the poor throughout history. Right? They're taken advantage of because they don't have. They're taking advantage of a story that tells them you can become big, you can become wealthy, you can become rich, you can have success with very little. And so this story gains a lot of the very little coming in masses, not knowing that in life, in financial life, you can't make something with a little, that it takes money to make money in this world, that you can't have a little and make it into big 99% of the time. I am not saying that there aren't exceptions out there. I'm not saying that you can't point one out of a billion people, maybe two out of a billion people. I'm not saying that, but that's not going to be the vast majority of experiences for most people. And so options attract people that don't to trade, day trade, usually attract people that are not adequately capitalized, and they look at the smaller prices of options versus the equities that the options are based on. And that's a mistake, because 99.9% of the losses that happen in options come from the cheap, lower cost options. The money making options are the expensive ones. And there we are, back to that whole thing. It takes money to make money. All right. Oliver, what do you think about Robert Kiyosaki's books on financial education as a base layer to start someone who understands nothing about money and basic things like debt and basic things like assets? All right. I would say that it's a great start. It's very general. Okay. So it's a good start to start going down the rabbit hole of what is money. Do you know how many people in this world don't know money? They want money, but they don't understand money. You know how many people in this world want money, but have not studied the history of money? How many people want money, but don't know what it is, where it comes from, how it's created, what makes a good money versus a bad money? Most people don't understand that there are good monies, there's bad money, there's monies that hurt you, and there's monies that help you. There's hard money, there's soft money. People don't know how it's manufactured or created. All right. And so, it'll take you down these rabbit holes. It'll make you, Robert Kiyosaki's work will also teach you the basics about debt and how debt should be used, and how in a fiat currency system, in a fiat run system, the way you become wealthy is to go in debt. And this is something that I think that Robert Kiyosaki does extraordinarily well. It's on the debt side that he does extraordinarily well. I like the fact that he's recently become a supporter of Bitcoin. All right, so his stock went up 2 points at least, as far as I'm concerned with that. But he does an extraordinarily good job of teaching and showing you that because we live right now in a fiat-driven world, which is a world by which governments print their own paper that's backed by absolutely nothing, that the way you take advantage of that is to actually go in debt yourself. But to go in debt, to take debt and use that to buy hard assets with. And that's how you beat a fiat system. Right? The problem with that is that most people the vast majority of the world lives on a dollar by dollar basis or a paycheck to paycheck basis. So they don't have extra to actually put into hard assets. And so a fiat currency system hurts the masses and rewards the upper echelon, the wealthy, the rich in a system like that, because they get the best terms for debt. And they can take what they get by going into debt, put it into hard assets like real estate and Bitcoin and things of that nature, while the other person is actually working their heinies off, right, for a fiat currency that's getting less and less and less the longer they hold it. So it's a theft of their time. But you can turn that system on its head by actually going in debt. So debt is the way to beat a fiat-driven world. And there are so many people that don't understand that. And I believe that Robert uh, Kiyosaki has done a wonderful job, at least blowing the top off of that and revealing it to the masses more than it's been revealed before his work. All right. TDG, I signed up for my son for your self-start trading program. Awesome. He is a junior in college. Wow, what a perfect time to start. I thought it would be a great way for him to learn more about money and investing. Absolutely. Absolutely. Now, here's the thing. I believe that it is a responsibility of every parent to basically start making their children aware of money and aware of financial markets and aware of debt and how these things operate. I believe that it is a travesty that the vast majority of young people come out of elementary school and even college and even graduate programs without understanding financial markets and how money operates. All right, this is a travesty. It is by design. All right, it is not a mistake that it's done. All right, because when you keep a nation relatively ignorant about money and financial markets, the powers that be or the governments can basically do things that would ordinarily cause an uproar amongst a more educated group of citizens. And so a government has a greater degree of freedom, all right, to do what it wants when its masses is not that educated about, especially money. And so I believe that if, for instance, most Americans understood that when you print $9 trillion of extra dollars, that you rob me of my time, my effort, and my very life, that I paid the price for that because the dollar I earned today is now worth 50 cents. So I have to now work twice as long and twice as hard to buy the same thing that I used to be able to buy by putting in half the time. So you take time away from me. And whenever you take a person's time away from them, that means they're a slave. And that's what a slave is. A slave gives 100% of his time, efforts, and his fruits of labor to someone else. Well, if your dollar has been cut in half, you've just given half of your time away. So you've become half of a slave. And I think that if more people understood this, right, from a young age, they would cause uproars, and politicians would not be able to, at the stroke of a pen, do these things. All right. But when you keep a nation relatively uneducated about these things and the impact that it has on your everyday life, all right, you're able to do these things which benefit the 1-2% of life and hurts the 98%. All right. That's right. Yes, a poorly educated society ruled by those keeping knowledge to themselves are taken advantage of. Absolutely. And guys, we have nothing but historical precedent after historical precedent after historical precedents of centralized knowledge. All right. What the internet has done is broken the chain of centralized knowledge, something that's been in existence for hundreds, if not thousands of years. At one time, knowledge was held closely by the church, and the church was against their closely held knowledge being available to the masses, all right? To completely keep their control under lock, they kept knowledge under lock. And this is why the church fought the printing press with so much fervor, because the printing press was an technology that had the potential of decentralizing knowledge, all right? And so the decentralization of knowledge began to really take hold with the printing press, that now, instead of a priest spending 6 months writing another copy of a book, the printing press would print the copy like this, multiple copies, make them widely available. That's now decentralizing knowledge. And that was a very important pivotal point in in our evolution, right? And then the internet came along to completely decentralize information and knowledge. And today, with a cell phone, I can hold just as many books as some of the largest libraries in the entire world. And that's the complete cycle of decentralization of information and knowledge. And this is the same thing that's happened with the access to the financial system, which was basically only reserved for a few. And so everything from policies like redlining and basically saying, no, accredited investor, you can't gain access to these opportunities unless you're an accredited investor. You can't have this unless you're a college degree person or this or that, this color, that color, live over here, live there from this country. You can't gain access to SWIFT or the financial system that we've created. All of this is centralized. And what's Bitcoin come to do? To completely blow all of that, just like the printing press, just like the internet. It's going to take money and blow it wide open and make it available to everyone. Do you know that a Bitcoin wallet is absolutely free to 8 billion people on planet Earth? It's absolutely free. It doesn't ask you what color you're from. It doesn't what color you are, where you come from, what your last name is. Bitcoin wallets are free. You can do a service for someone like fix their freaking roof, all right? Or sweep their yard, sweep the leaves off of their yard and say, listen, pay me in Bitcoin. And boom, now you've got some Satoshis. And no one can stop that. There's nothing centralized. You didn't fill out documents, right? You didn't have to get approved. Do you understand? There's no one controlling your account, and there's no one that can tell you what you can do with that Bitcoin that you earned. You can spend it anywhere or transfer it with someone else for something of value that they have. And so Bitcoin's come into this world to do what the printing press has done, to do what the internet has done for information and knowledge. It is now the internet of money. It is going to decentralize money. All right. And this is why you need to get off zero today. Today. Like if you don't have a few Satoshis right now, if you don't have Bitcoin right now, I'm telling you, you are falling behind. Get freaking off zero. I don't care if it's $1, $5, start. All right. Because you can look back today and see the companies that didn't believe that the internet was a thing, the companies that called the internet a fad, the companies that said that the internet was just for porn sites and criminals. All right. Where are they today? Where are they today? Guys, do you know that in the year 2000, I don't know how old you were in the year 2000, but in the year 2000, guys, all right, in the year 2000, this is crazy, that I saw this on Twitter, that the Palm Pilot, I don't know if you guys remember the Palm Pilot. The Palm Pilot was worth more than Apple and was worth more than Apple at the time. It was, while Google had not yet come public, Google did have a value. It was worth more than Apple and Google at the same time. And when's the last time you've seen a Palm Pilot? All right. When you don't embrace, all right, when you don't embrace the new disruptive thing that decentralizes what it's disrupting, because that's what Apple did. It decentralized what was being centralized by things like Palm Pilots and things of that nature, and it brought disruption and if you don't adopt these things, right, you're gonna become the Palm Pilots of the world. All right, and you've got to be open-minded enough to embrace these things. All right. Okay. Okay, let's see here. What else do we have? Let's see here. Okay, Oliver. The gap up or down happens in stocks, right? But in Forex, currencies, it will not. That's true. So if gap up or down happens, then it becomes tricky, right, to trade in the stocks compared to Forex? No, 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 no. Don't look at gaps as being bad. All right. Gaps offer some of the best trading opportunities out there. All right. So there are certain, so I teach my traders to categorize the type of gap you're experiencing in a stock. So for instance, there's an excessive gap, okay, where the excessive gap, if to the upside, I mean, way bigger than normal, that gap has a stronger tendency to do what? Continue up or continue down? Well, continue down. Why? Because the people who owned the stock from yesterday get an instant big giant windfall. And if they see even a little bit of red, meaning their windfall is starting to get smaller, boom, 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 they start selling. And so the excessive gap brings a large number of sellers to the game. And so my traders are taught excessive gap. If you start to see a little bit of red, boom, hit it up on the short side, stop above the high, and you fade the gap. It's one of the easiest money-making tactics out there. It works in reverse as well. Then there's something called an igniting gap, which is more of a gap and run. See, that's a gap and crap. Then there's the gap and run scenario, where it's not too big, but it's just enough to excite the market. So when a stock the previous day is doing nothing and then gaps up slightly the next day, that has greater odds of gapping and running. The gap causes the people from yesterday to buy more and causes people who didn't own it yesterday to get in now, like my traders. And it creates a driving force. So there's the gap and go, and then there's the excessive gap and crap. And when you know those two scenarios, all right, you can add them to your arsenal that can make a consistent revenue stream if you play them correctly. All right, you're never going to get 100% from any tactical strategy. But no, gaps are a big money maker in our business. And it's one of the main reasons why you don't see me predominantly trading futures, because I rely on the gaps. All right, and futures just simply, I mean, if you get a gap in a future, if you get a gap in a currency, there's something serious going on. All right. But that's one of the main reasons you don't see me trading currencies very frequently, because gaps are a very big part of my trading arsenal. Okay. All right. Let's see here. Okay. Oliver, thank you for sharing your knowledge with us. You saved my life, low key. I appreciate that, Luciano. Thank you, Luciano Pucci. Thank you. Do you have an alternative for measuring candle size? All right, this is an interesting question. Candle. Some people have trouble, like, is this a big candle? Because on their chart, they're like, wait, I don't know if that's a normal candle or is it a big candle? Now, this can come down to two things. First of all, you have to know the stock you're trading. The stocks you're trading have to be like family members. They have to be like your children. You know how, like, you know when your children's not telling you the truth? You got to know your stock. Your stock has to be as intimate as your children are. You're not telling me the truth, because sometimes your stocks don't tell you the truth. Sometimes they perform well, sometimes they don't, sometimes they're naughty, sometimes they're good and great, sometimes they make you proud, sometimes they make you want to punish them. But you have to know your stock. This is where your edge comes from. You have to know its average daily range on a big day, its average daily range on a normal day. All right? If you don't know these things, then how do you know a move has statistically gone too far and there's not enough left to produce another gain? All right? And vice versa. So you have to know your stock. And by knowing your stock, you'll know what a big bar is. You'll know that based on my history with this stock, this size bar does not happen regularly. It's larger than the normal bars. And so when you don't know what's the difference between a small or a medium or a big size stock, that a big size bar, that tells me you're not really trading something you're intimate with. That's number one. All right, become intimate with the things you play. And the way you do that is to pick 6 to 10 and play them every day that you trade. Okay. In addition to that, all right, the size of the window on your screen, right, plays a factor in how you shape it. So for instance, if you shape the windows on your screen very narrow, okay, so if the chart window is narrow, the bars look taller, right, than they really are. So now you're reacting to things that look big that aren't necessarily big. All right. If you stretch the chart too wide, it shrinks the bars this way and gives you the false notion that not much is happening. So the ratio of the box, the window that you're looking at the chart through, becomes important. Yes, everything matters. And so a perfect square is the right way. No matter what the dimension, it shouldn't be, the width shouldn't be wider than the height. Do you understand? So you want perfect squares in your charts. And this will make the ratio of the bars, the size of the bars, natural and true. And if you combine that with knowing your stock intimately, you'll be able to spot, this is a big one, this is a medium one, that's a small one. All right? Without doubt. All right. Oliver, great chat. I always wanted to invest in Google, and with the announced split, I would love, yes, I'm loving this split, guys, in Google. Oh my God. Okay. I would like to know if you think buying now is a good idea, or is there a possibility of more downside? I think it's a possibility of some more downside, but I do think that the market is setting itself up for, over the next several weeks to a month or so, of a really huge move to the upside. All right. What the Fed normally does, guys, when it goes into a hawkish stance where it's going to supposedly curtail some of its QE activity, raise interest rates to basically take money out of the system, right? These are objects to take money out of the system. Right? There's too much money in the system causing inflation, so we have to take money out of the system to bring inflation down, right? And they basically have, they have these levers that they can use to try to do that. Okay. Now, what they in recent history have been doing is trying to talk the money out of the system versus actually do the moves that take the money out of the system. So one of the moves is to raise interest rates. All right. But what they will do is they will warn of the possibility of raising interest rates. And if that warning does not do enough, they'll warn again and say, we're thinking about raising interest rates. So it'll start there. We're thinking about raising interest rates. And then it'll go to a more serious stance. We're thinking about raising interest rates. Now, this is one thinking. Then if that doesn't do the job, they'll go to the third step. We're going to raise interest rates. We just don't know when. All right. Then if that doesn't do enough, they'll go to the next step. We're going to raise interest rates, and this is when we're going to do it. And so all of these steps are designed to have markets react to them, okay, and pull excess out of the market. And if I can, maybe I can even show this to you guys. I don't know if I can do this really fast. And this will be the last thing I do if I do this, right? So I can show you something like, Roku, okay? So let me see if I can do this here, guys. Let's see. I can do this here. If I can do something like, boom, yeah. Boom, there we go. All right, so I'm hoping you can see this, right? So we're looking at. I wanted to show you. We're looking at a weekly chart of a stock called Roku, RUKU. Now this was one of the pandemic's darlings, right? So take a look at pre-pandemic. Take a look at pre-pandemic pricing. This is pre-pandemic. Okay, this was the pandemic drop and the quick rebound due to quantitative easing. All right, is it not working? Is it not working? Is it not working? Is that what you're trying to tell me?
There's a delay, but it's right in the corner. Like you can only see the corner of your screen.
Okay, so it's not going to work. It's not going to work then. Okay, it's not going to work, guys. Okay, thanks, guys. Sorry about that. It's just not going to work. I can't do it. I can't remember how to do this on this platform. But look, for instance, if you go, right, traders, if you go to a daily chart of ROKU, do it. No, a weekly chart, okay, of ROKU. And you look at right before the 2020 drop. So let's say January, February 2024, January 2020. So January or February 2020 on the weekly chart. And you take that price and move it all the way to today, you will see all the value that was created, money out of thin air, basically, that was created by the pandemic. You'll see some topping up there, and then boom, we start moving all the way back down to pre-pandemic levels. So this value was taken out of the system. All right, value that could have been used for something. Okay. It's also, what it's done is, if the value hasn't totally disappeared and only a portion of it, the other portion goes into things like treasuries and T-bills, right? And this helps to do exactly what the Fed's levers are supposed to accomplish. And if it accomplishes what they want well enough, then they won't, for instance, raise interest rates as much as is expected. They won't ease their quantitative easing efforts as aggressively as they initially said they would. And so it's important, I think, to understand this cycle of what happens, because great opportunities can happen when you understand, in the equity markets in particular, how the Fed operates, what it does, and the effects and the reactions that stocks usually have because of these actions. You know, and living through so many of these cycles, it's almost like I can almost predict with the back of my hand generally what the pattern's going to be. Talk, and if it's really something that has not been truly accomplished, raise, maybe 3 times. Maybe. I believe that if we get to a raising of interest rates point, that's when the market starts to rally. You see, you have to understand that the market is a discounting mechanism. We've already discounted, right? We've already discounted 6 or 7 interest rate hikes into the prices already. You saw what Roku did. If you take a look at Facebook, look at what Facebook did. Look at what so many things did. It's priced in the Fed's actions up to a raising of interest rates maybe 6 or 7 times. And so once the hiking starts, what normally happens is that the market firms starts to bottom, because it realizes, wait, this is already priced in, so it's not bad. All right. And by the time you get maybe another interest rate hike or whatever, the market starts to realize, like, look, this has already been priced in. We can basically ignore it in the market. Boom, explodes. All right. What I will tell you this as well in closing is that Bitcoin right now is being priced and treated just like one of these tech stocks, let's say, that needs to be deflated. Okay. I think that is a mistake, but it doesn't matter. That's what it's being treated like and treated as a basic technology risk off investment. I believe that decouples, okay, not too long from now. So I believe there's a point where Bitcoin decouples and stops being treated like a tech stock. All right. I believe that's not too far from now, in my opinion. This is my opinion, not financial advice. The other thing I will tell you is that in 2017, the Fed was raising interest rate hikes, and Bitcoin had one of its most unprecedented bull runs during the Fed raising interest rates. So I believe that there's a possibility of Bitcoin taking off once interest rates start being hiked. People have it backwards. So you can go back to 2017 when Bitcoin ran from 200 to 20,000. Guys, check this out. Starting in 2016, of course, but 200 to 20,000 while the Fed was raising interest rate hikes. Well, the Fed's about to raise interest rate hikes in March. What if it repeats what it did when the Fed started raising interest rates in 2016, 2017? What if that's when it starts its unprecedented rally? Get off of zero now. All right. That's not financial advice, guys. I'm here to give you financial entertainment. All right. Take it for what it's worth. I'm just a guy on the internet. Okay. All right. But I love you to death, guys. Thank you so much for showing up to these things. I want to thank you for subscribing to the channel, turning the the notification bell in the upper right hand corner. Please, guys, like this video, share it with some friends, continue to stay close. Follow me on Twitter and Instagram in particular, and I will see you, all right, during our next, right, live session. Okay? Love you to death, my guys. Love you to death. Let's do this. Whew, another one in the bag. Boom. Ciao. My tea's cold, but this is some good tea, though.